Hey, it's Michael Saul with the Stock Market Trading Watch List for Friday, September 9th, 2011. As always, the SPY video is up on the blog, but real quick, came up, we filled the gap, and then we sold off. Breath was the clue. It was not chugging in a nice, strong manner, and that led to failure as the market tried to test up again. So, do we just roll over here? My opinion is that we don't. My opinion is that we go up and at least test the 50-day moving average on the S&P, the NASDAQ 100. If the SPY were to get up to that 50-day NASDAQ 100, may even want to test this 200-day. The Russell, okay, same thing up here at the 50-day moving average. Now, that being said, I will not fight the market here. Okay, just because I have an opinion that we're going to continue to rise and I think suck some more bulls in before we slam back down does not mean it's going to happen. Okay, we could see here the Russell probably has the best looking coil, although it's not as, I don't know, it's not really that great. Okay, so, I mean, we could watch to see if we can get a break here, or we can come back down, maybe test the lower end of this and continue to chop around. All right. So Obama gave his speech on Thursday night. I'm doing this at just about 11 o'clock. And, I'm reading the reviews because I'm really bad with political commentary and how it will affect the market. And, it's never been my strong suit. I always like to watch for the market to react and then look to jump on board a continuation pattern or something like that. I mean, with any news, right? So, a lot of people are just panning Obama, saying that, this is just another bill that's not going to do anything. And, I don't know the economic effects of it. I don't know if it's going to really put a stopgap in this decline, obviously, if it passes and stuff like that. But I feel that the market still has lower prices to be seen. I feel we're in the early stages of a bear market. And I will change my mind if we get back up over that 200-day moving average. If we do, I'll gladly change my mind, and I won't feel one bit bad about it. Okay? This is how I judge the bull and the bear, the 200-day moving average. When we're above it, I lean to the long side. When we're below it, I lean to the short side. And that doesn't mean, okay, we're below the 200 days, so we can only go short. That's not the way I look at it. But I use that 200-day as my bull-bear barometer. There have been studies that have been back-tested for, years and years, and there is an absolute edge in looking for longs above the 200-day and looking for shorts below the 200-day. Okay? Now, is it a huge edge? Is it 95%? No, of course not. If it was, you'd never hear about it, right? But there is an edge, and using that, whatever it is, maybe it's, I don't know the exact numbers. I mean, I have the book somewhere actually where it goes over the back testing of it. And obviously past performance is not indicative. I understand that, not indicative of future results. Things can absolutely change. But, being a technical analyst, I look at the past to predict the future. Anyway, whatever that edge is, it's a starting edge that you now build up with other patterns and volume analysis and market profile, if that's your particular brand of vodka that you enjoy, okay, or Fibonacci or Elliott Wave. But, you start stacking the edges until you have something that you're really comfortable with in making an opinion on, okay? And for me, the way the market's acting, we're below the 200-day moving average. The rallies have been weak. Okay, the volume has just not been there. It didn't look like climactic volume on the downside. I know some people are like, what, are you crazy? It was the highest volume in a couple of years. Still doesn't look like climactic volume. Okay, I don't think that the utter panic has set in. And I think that the way this market is going to work is we're going to get a lift here. I think we're going to sucker in, like I said, some more bulls, and then we're going to get smashed. Now, if I'm wrong and we just go down from here, okay. Then I'll be looking for a test of those lows and more than likely a break. All right? So let's go through the sectors. Not going to see much here. All right. Not much to talk about on these. So the banks, a little inside day. Brokers. Okay. Cyclicals. How about retail? Somebody said, Tiny, you never look at retail. And that's because I don't know the symbol. No, I do. I just, some are .x and some are without it. All right, so here's retail sitting right here. All right, the moving averages here. This isn't a great picture. This isn't a great pattern here, but you can watch it. And, you know, what can it do here? Can it get up above those moving averages and go into bull mode again? Or is it going to hold here and come back down? Okay, showing relative strength, obviously, compared to the S&P. Okay, gold. Just kind of whipping around here. Let it tip its hand. Silver, the same thing. OIH for oil. Okay, another coil here. All right. Like this. This. Okay. All right, let's look at some of the big stocks. Apple. And remember, yesterday, I really wasn't a big fan of how these stocks were acting. And then it looked like Apple was going to do the right thing here. It looked like it was going to rally. I thought it was going to come up and retest these highs, but no. Amazon. Yeah, just... I mean, I don't like it being on it. It's like out here just flapping in the wind here, right? So is it going to pull back to the moving averages, or is it going to come up and test these highs? Something I want to look at eBay. Not one of the big leading stocks, but definitely something I'll look at. Sloppiness under the moving averages. Yahoo. Okay, nice move here. All right. Somebody wanted to talk about Open because of Zagat being bought by Google. It looked like it held support down here. So now what we do is we can... Gonna probably have to change this to something like this, something like this, somewhere. Okay, let's see if it gets a break one way or the other from this range. Obviously the break has to come with volume, but you can see here, a lot of volume here. 8.3 million, I think that's all time, right? Yep. Okay, RIM. So it wants me to keep talking about RIM here. And the 89 looks like the cap for now. See if it can get over it. Home Depot. And Lowe's. Yeah, nothing. Nothing there. Somebody asked me about Hewlett Packard. Yeah, looks weak. Cisco. Okay, nice break today. Let's see if it can get above this 1650 level. There's a chance to test that 200 day, but good leadership, up 2%. Okay. Verizon. Yeah. Nothing much. Disney. Nope, looks weak. Goldman. Looks really weak. Keeps getting hit. Ford. Does not look so hot. Toll Brothers. Yeah, somebody want to look at some of the housing stocks. Okay. Yeah. No, not much going on there. So, let's see. Netflix we've been looking at for a couple of days. Man, looking weak here. Not good. Priceline. Yeah, the Doji. That's not saying much. CMG. Still showing a little bit of relative strength here. Okay, it's below the 50-day, but it's above the other moving averages. So let's see if we could get maybe draw a better line in now. Let's see. Okay, there it is. So yeah, you got a coil here. You can watch for a break one way or the other from this. Alright, first resistance will be right above here at 321.50. And then first support will be this 89, just under 300. 297.70, 297.50s. All right. Have a great trading day on Friday. Let's see what the post-Obama speech does to the market. I will talk to everybody over the weekend. Have a great weekend as well, and hopefully the weather will clear up for us northeast folks. Yeah, it's supposed to rain until Sunday again, so good luck if you're getting floods and stuff like that. It's just brutal. First a hurricane, and now it's still relentless rain. So, anyway, have a great day Friday and a great weekend.